You want me to believe Brookfield dropping 3.2 billion on UK pensions is the sexiest deal of the week?
Guaranteed cash flow is incredibly sexy, Nate. They just locked down the entire annuity market.
Oh, come on. Netflix is supposedly kicking the tires on Warner Brothers. That is a literal blockbuster.
That rumor is pure banker fan fiction, and you know it. I only care about real ink on paper. Like Legrand quietly buying up the data center supply chain.
You mean buying everything that plugs into a wall? The rundown. So you're telling me I need to take Netflix buying Warner Brothers Discovery seriously?
I'm telling you, the rumor mill is running red hot right now. Google is eyeing Wiz. Netflix is supposedly kicking the tires on WBD. The analysts are officially declaring 2026 the return of the mega deal.
I'll believe Netflix buys WBD when I see the Stranger Things kids fighting Batman. But fine, let's hit the rundown. First up, French electrical giant Legrand.
Right, they're doing a data center double dip, buying Chinese rack manufacturer Keydak and UK power specialist TES.
Because you can't build an AI empire if the servers literally melt. It is a very smart play to grab the picks and shovels of the data center boom.
Exactly. Meanwhile, Molex is bolstering its RF component portfolio. They just bought Smiths Interconnect from Smiths Group.
Ruggedized connectors? Say it with me, Maya. Ruggedized connectors.
You really love that phrase.
It sounds so aggressive. I love a good industrial component deal. Speaking of aggressive, Count Limited is dropping $72.2 million to acquire Oracle Group, expanding their financial advice footprint.
And Mountain Gate Capital picked up Upswell Marketing. That makes it the fourth platform investment for their Fund 3. Private capital is just flexing right now.
They have to. Dealmakers are aggressively pursuing transformational acquisitions to reposition themselves. Private credit is basically financing the whole party.
Hold on. I read those same reports, and I am not buying the pure, unadulterated optimism. You look at the geopolitical mess right now. The South Korean buyout market is completely iced over. Deal values plummeted by more than half in the first quarter.
Oh, come on. South Korea is dealing with specific regional dynamics. You can't ignore the broader trends. Look at biopharma. They just wrapped a blistering $46.8 billion first quarter. Eli Lilly is absolutely hunting for their next target right now.
I'm not ignoring it. I'm just saying the regulatory scrutiny is very real everywhere else. You think the FTC just sleeps through Netflix buying Warner Brothers?
Fair point. We should also watch for Boston Scientific making a formal move on Penumbra and HG Capital circling OneStream.
Lots of circling. But if you want to talk about deals that actually cross the finish line, we need to talk about Brookfield.
Oh, we absolutely do. $3.2 billion for a massive piece of the UK retirement market. The big one. So we're officially calling 2026 the year the mega deal came out of hibernation. I mean, look at the absolute scale of what Brookfield Wealth Solutions is doing right now.
$3.2 billion for Just Group, or £2.4 billion, if we're being precise, and I am always precise.
You're painfully precise. But step back and look at the macro play here. Brookfield is swallowing a dominant player in the UK pension risk transfer market. This is classic private capital flexing its muscles. They want permanent capital. And nothing says permanent quite like individual annuities.
I hear the narrative, Nate, but I actually read the footnotes. You're buying a UK pension book in a regulatory environment that is, frankly, terrifying. The capital requirements alone are massive. Did you look at the solvency ratios they have to maintain?
I did, and I completely disagree that it's terrifying. It's a moat?
Oh, come on. A moat filled with actuaries and compliance officers?
Exactly. That is the best kind of moat. When I was in banking, we pitched these structures constantly. You buy an annuity business, you're basically buying a massive self-funding pile of cash that you get to invest. It's like buying a toll bridge where the cars pay you to cross. Brookfield knows exactly how to squeeze yield out of those assets.
Squeezing yield out of UK retirees. What a beautiful corporate romance.
Hey, the math works, and honestly, who else has the balance sheet to take down a $3 billion regulated asset right now? Traditional buyers are paralyzed. Private capital is the only game in town.
I'll give you that. but I still think Brookfield overpaid. 3.2 billion is a massive premium for a market that's been heavily picked over. Just Group is solid, but they aren't exactly a high-growth tech darling with AI capabilities.
They don't need to be. They're a cash printer. You're too obsessed with tech multiples, Maya. Sometimes boring is beautiful.
Boring is fine. Overpaying for boring is what gets you fired. Though if we want to talk about tech multiples, we should probably talk about what Legrand is doing.
The French electrical giant.
Right? They just pulled off a data center double dip. They bought Keydak, the Chinese rack manufacturer, and TES, the UK power specialist. They're aggressively rolling up the physical infrastructure side of the AI boom.
That's actually smart. Everyone is looking at software. And Legrand is out here buying the literal metal racks and power cables. It's the classic pick and shovel play.
Exactly. And unlike Brookfield, Legrand isn't buying a regulatory headache. But speaking of massive spending sprees, we need to talk about biopharma.
Oh, the first quarter numbers are staggering.
$46.8 billion in the first quarter alone. And I'm hearing Eli Lilly is actively hunting again. Plus, dealmakers are on high alert for Boston Scientific to officially file for penumbra.
We have to unpack those biopharma valuations next, because next to them, Brookfield actually looks like a value investor. Voices. I am looking at this note from the analysts this morning, and they are officially calling 2026 the return of the mega deal. They are saying buyers are aggressively pursuing quote-unquote transformational acquisitions to get AI capabilities.
Transformational. Drink. Every time a banker uses that word, an angel loses its wings.
Hey, it is a perfectly good word when you are talking about massive scale. Look at the rumor mill right now. You have Google circling Wiz for cybersecurity, and the big one, Netflix potentially making a blockbuster play for Warner Bros. Discovery. That is the definition of transformational.
Netflix buying Warner? Oh, come on. I will believe that when the ink is actually dry. Regulators would have an absolute field day with that. The analysts are conveniently ignoring the back half of their own memo. They literally wrote about heightened regulatory scrutiny and complex geopolitical headwinds in the next sentence.
Sure, but private capital is stepping in to bridge the financing gaps. The money is there.
The money might be there, but the confidence isn't universal. Look at South Korea right now. Macro uncertainty completely iced their buyout market. Deal values plummeted by more than half in the first quarter, more than a 50% drop, Nate. The mega deal narrative is completely skewed by a few loud rumors.
Okay, fair point on the Asian markets, but you cannot ignore the sheer volume of whispers right now. Even if the massive deals get bogged down in antitrust hearings, the mid-market is still eating.
Now that I agree with, we are seeing companies quietly roll up smaller targets while everyone else is distracted by the Netflix gossip.
Exactly, like Legrand doubling down on data centers with Keydak in China and TES in the UK, or Molex carving out Smiths Interconnect to get those RF components. They are just grinding out the strategic plays.
Let them grind. But if you want to see where the actual heavy hitters are hunting next, we need to look at biopharma. They just wrapped a blistering $46.8 billion first quarter, and Eli Lilly looks very hungry.
Not to mention, we are still waiting on Boston Scientific to make it official with penumbra. Let's see what tomorrow actually brings. Spill the tea. I am telling you, the whispers about Netflix making a play for Warner Bros. Discovery are getting louder. And honestly, I see the vision.
You see the vision of taking on $40 billion in debt just to own the rights to Game of Thrones spin-offs.
It is not just dragons, Maya. It is the ultimate content library play. Everyone is saying 2026 is the official return of the mega deal. What is a better mega deal than streaming finally eating traditional media alive?
Regulators eating that deal alive. That is what is better. There is zero chance the FTC lets Netflix swallow Warner Bros. Without a multi-year court battle. Plus, I actually read WBD's latest balance sheet. It reads like a Stephen King novel.
Look, Warner Bros. Is basically the corporate equivalent of a cursed amulet. AT&T wore it, Discovery put it on, and now maybe Netflix wants to see if they can break the curse.
A cursed amulet with terrible free cash flow. I will pass.
Okay, skeptic, but what about Google sniffing around Wiz?
Now that I buy, Google desperately needs a cybersecurity darling to secure their enterprise cloud business. The AI angle makes it an easy sell to their board. They have the cash to actually pull off a transformational acquisition.
The rumor mill is running so hot for US mega deals, you almost forget the rest of the world exists. Have you checked on the South Korean buyout market lately?
I have. It is an absolute freezer. Deal values plummeted by more than half in the first quarter.
Geopolitics and macro uncertainty just threw a giant bucket of ice water on the whole region.
It is a tough quarter to be a banker in Seoul, but while they are freezing, private capital is finding very weird places to park cash. Speaking of which, we need to talk about the UK retirement market. Brookfield just dropped $3.2 billion on a pension play that is actually kind of brilliant. Tomorrow's radar.
I'm telling you, the mega deal is back for 2026. Just look at biopharma, $46.8 billion in the first quarter alone. Eli Lilly has to be shopping right now.
Oh, Lily's definitely shopping, but you're ignoring the actual filings to chase ghosts. I'm way more interested in the Boston Scientific and Penumbra paperwork dropping tomorrow than these wild Netflix and Warner Brothers whispers you keep bringing up.
How is a streaming monopoly eating a legacy studio a ghost? It's the ultimate synergy play.
It's a banker's fever dream, Nate. Have you looked at the South Korean buyout data? Deal values dropped by more than half. The macro environment is freezing over, and you think regulators are going to wave through Netflix buying Batman?
Okay, wow, way to crush my dreams with geopolitical headwinds. Fine, no Batman. But if HG Capital officially files for one stream tomorrow, I get to gloat.
Deal. We'll read the fine print on that one in the morning.